So, all right. Well, let's move on here. Let's move on to the next company we're talking about is where is it here? Marriott International, or no, Marriott Vacations, I guess. Yep. Symbol is VAC. And this came up. I saw this in a recent financial publication. That it just looks like it's on sale. So I want to kind of give this to our listeners as well, kind of take a look at it. We've not done a deep research on this yet, but Marriott Vacations Company, symbol is VAC. They're in the industry of resorts and casino. Short is about 8%, not high, but definitely not low. Now, what I liked about it initially caught my attention was the valuations look pretty good on it. The PE ratio is 12.6 versus 25.9 for the industry. Price of sales 0.5 versus 1.4. Price to book value 0.8 versus 3.1. And price of cash flow is higher, though, 19.8 versus 7.4. The PEG ratio, very good, 1.3 versus 4.5. Now, over the last year, unfortunately, their earnings fell by 13.1% when the industry was up 26.1%. We do see sales for Marriott Vacations did climb by 4.2%, not quite as good as the industry at 5.5%. And they do see 5-year growth in the earnings, about 7.6% below the industry at 8.7%. Now, they do pay a dividend. 5.6% is that dividend yield. They use 64% of their earnings to pay that out, so that looks pretty good there. We do see on the balance sheet, current ratio 3.7 versus 1.3. Debt to equity is 2.3 versus 6.2. And we kind of talked about this briefly, Chase. That sounds very high, but this is a timeshare company. We're not sure how the real estate is, how the debt works and stuff. So this is the research you have to kind of do.
Yeah, just real quick on that point. I mean, they do develop, sell, and then finance the timeshare interest. So the thing I'm not fully understanding yet, and they do own, it looks like, a lot of real estate. So, yeah. I mean, to me, that's a positive. But when they're doing the timeshares, I'm not sure how they carry the timeshare on their books, because if you have, let's say, a timeshare and you own that timeshare, well, that might be a liability on the books.
Yeah.
So it might distort that debt to equity ratio as well. So there is more to understand with this balance sheet, because it is not just, I'm going to say, a simple balance sheet.
And it could be like car companies,
yeah.
where they carry the paper for the debt when you buy a car. Maybe that's the same thing here. But again, it's something that you want to look at, because it doesn't look good. Again, you got to understand the numbers. They do have a net profit margin 3.4. That's below the industry at 5.5. Return on equity is 7 versus 30.5. I would like to see that higher. Free cash flow is only 63, I would say, million versus 778 million for the industry. Just got some research to do. What do you got going forward here, Chase?
I mean, it looks interesting. Marriott Vacations Worldwide, again, their ticker symbol VAC. Current price $57.67. 52-week range, low $44.58, and high, like you said, it's on sale. $91.18 is the high. The 5-year return here is down about 58%. And over the last year, it's really suffered, down about 36%. But this is where it gets interesting. You go out here to December 2026, estimated earnings per share is $7.07. It gives you a target sell price of about $117.36. It trades around 8.5 times those future earnings.
Yeah, and those earnings, there's 11 analysts. High is 847, low 545. I don't really like seeing that. I wish they were tighter. I do know when I was looking at this, what I was reading was that the other ones, like from Hilton and Wyndham, they've actually done very well. But the Marriott, they don't have a CEO. They're in the middle of a remodeling. So this could be a buying opportunity. But again, a lot of research to do here on this.
My big question is, again, I haven't looked at the real estate footprint, but what real estate do they actually own here across the country, across the world? Because the market cap on this company is now about $2 billion. I almost wonder, are they at a point where the real estate is exceeding the value of the market cap on the stock? Because that would be, again, in my viewpoint, a buying opportunity, because that real estate is tremendously undervalued. They could liquidate the whole portfolio, let's say, and have, a market cap, let's say, of $3 billion. I don't know what that is, but if the underlying real estate is substantially more valuable than the market cap of the company, that's got to be a room for increase in that stock price.
When I was also reading about it, it did show that people think, oh, timeshares are for old people. Actually, now the average age is about 39 years old. So people are saying, hey, this is a pretty good deal. But to answer your question, too, and I'm kind of wondering, because as a timeshare owner, you own a small piece of that.
Yeah.
So who owns the real estate? Each individual owner? Marriott?
Well, that's what I mean. It could be a little bit problematic on the balance sheet, right? Well, technically, Marriott carries the asset of the company, but then also the liability to the timeshare holder. So
right.
there's some question marks.
Yeah, you got to be careful. That's why you got to do the research.